June Bank of England was the last one with Mervyn King as the governor, and yet no signs of improving the economic stimulus were shown. John Hardy, head of FX strategy with Saxo Bank, thank you very much for being with us. Okay, John, do you think that the new governor, Mark Carney, is going to change the policy, or is going to follow Mervyn King's path?
Well, we have a new Bank of England on the way. It has an expanded ability to so-called remit, so it has more powers than the bank had under Mervyn King. But the focus now is, oddly, before the UK economy was doing poorly, and the anticipation was that, oh wow, we have a new governor on the way that's willing to go into these new areas of experimentation, nominal GDP level targeting, and the like. And then suddenly we're getting a small mini renaissance in the UK economic data. So I think everything's gone quiet on the pound. It's actually come back a bit stronger because the market was caught on the wrong foot. It was a bit too bearish on the pound. So what you have is a data-dependent situation. We know at Carney what his rhetoric from his testimony before Parliament suggests that he is willing to go in these directions. He does talk about the dangers, but it's something he will experiment with when and if the UK economy falters again, and I think it will because it's structurally not very sound. I think this could be a sort of a small period of strength followed by new worries in the fall.
But you wrote recently, you wrote about the pound, and you said that the trend maybe is changing in the short term or in the mid-term because it's showing some fatigue. What do you think? Is it going to change? Is not?
Well, I think those specific comments, we're here very locally. We're hitting the 200-day moving average, 157. It's also kind of in the middle of the range from previously. So a real point of uncertainty here. And I'm not sure that the Bank of England provides us necessarily direction, because if the economy continues to sort of percolate along without any new shocking data, I think we just have him getting his toes wet at this first early July meeting. So again, I think it's a bit further out before we get some indications on how we should be viewing the pound.
Okay, and let's change the subject to the euro dollar. What's your forecast for the medium and long term for the euro?
Yeah, my forecast has been quite off lately because the euro has backed up quite a bit based on the ECB effectively not indicating any new signs of easing, maybe because it's not really able to until we get this situation cleared up with Europe, and that may have to wait until after the German election in September. So at the same time, we have uncertainty over the Fed and when the timing of the tapering and so on. But the situation is clear now. As long as the ECB's balance sheet is shrinking and the Fed's continues to expand, the risk is that it continues to dribble and back up slowly. I just think it becomes too painful at some point. Europe has to act. Either it becomes too painful and you start to see the reminder that there is still something called systemic risk in Europe, and that hits the euro, or we see the Fed U.S. policy moving one way and the ECB is eventually anticipated to be forced into doing the same to bring more relief to the periphery, which continues to suffer.
Okay, and so you said that the European Central Bank policies are helping the euro but not boosting it. So
it's not really helping the euro. It's merely a source of strength because it's if you will, it's a tight money policy relative to what the Bank of Japan is doing, relative to what we're seeing still from the Fed. Though we are anticipating, of course, some kind of pivot from the Fed soon, and that will be a key element in eurodollar. And I think eventually eurodollar does turn back down below 130 again, but.
Below 130.
Yeah, for the 1 to 3 month time frame, and lower still further out.
Okay. Thank you very much, John.
Thanks.